Okay, here we go again. The Wicked Awesome Report is live again, thanks to the power of social media. I'm Patrick Queally, your host for the Wicked Awesome Report, joined by my co-host, Declan O'Toole from Select Real Estate. Good morning, Declan.
Good morning, Patrick. How are you?
I'm doing well, thank you. So the Wicked Awesome Report broadcasts this every Tuesday and Thursday at 10 a.m. or 10-ish, depending on our technical difficulties. Everything went smooth this morning to start the broadcast.
10:01, Patrick, 10:01.
Exactly, 10:01. So if you're interested in seeing future shows, future broadcasts, please give us a like over at Wicked Awesome Report Facebook page. Give us a comment, drop a like, share, and we're always looking for new guests to come and join us that maybe want to be interviewed. We've been talking a lot about the pandemic and how different businesses have been impacted. So certainly would love to have some local business owners come and join us and talk about their experiences. But today's show is going to be a little bit more real estate centric. We're going to be talking about condos and some of the pros and cons, some of the ins and outs on what you need to do or what you need to be aware of if you are interested in purchasing a condo. So I'm going to talk a little bit about some of the financing aspect of that. And Declan, you'll be able to chime in on some of the as a real estate agent advising and guiding some of your clients through the process of buying a condo, because there are some nuances, a little bit different than buying a single family home.
Correct. So I'll be speaking from the front line, so to speak, and you'll be speaking from behind the scenes in terms of what really needs to happen with the financing.
Exactly. So, a condo is a different class of collateral. So it's a different form of ownership. And that's really more on the legal side of things. But from the financing side, it's a different type of collateral. So I guess the best way to explain it is by comparing it to a single family home. Okay, so if you're purchasing a single family home, Declan, you're buying one sort of self-contained, standalone unit. Okay, the collateral, the real estate that's being bought is one, I guess, self-contained entity, if you will. Okay,
you and the bank own it 100%.
Exactly. So from all four corners of that lot and everything that's in between, you own it and you have a mortgage with the bank to be able to purchase that. A condo is a little bit different in the sense that, or a lot different in the sense that from the four corners of the lot, you really don't own everything that's inside that. You have a fractional ownership percentage based on what the condo documents, and we'll talk about the condo docs in a minute, but you have a fractional ownership percentage based on what the condo docs say. Okay, so if it's a 10 unit complex and all 10 units are equal, you own 1/10 of the condo complex. So when it comes to mortgage financing on that, it's a different risk category because it's a different type of collateral. So again, sort of compare and contrast, when you're talking about financing a single family home, well, that single one standalone entity as the collateral, the value of that is assessed by taking a look at other similar size and style homes that have sold in that neighborhood. Okay, so a home, 2 or 3 doors down or a block away, or even next door, certainly can have an impact on what the value of that single family home is. Okay. However, the correlation between neighboring properties when it comes to a condo complex is much more dramatic. Okay. As a matter of fact, an appraiser typically has to take a look at a recent sale within the same complex to try to come up with a fair market value. So what else is going on within that condo complex is really going to have a much more direct correlation and impact on what the value of the collateral, the unit that you're interested in buying, is going to be.
That condo complex is essentially your neighborhood.
Exactly. Yeah. So you're buying into a larger entity, the condo complex. So the value of the collateral, the unit you're buying, can be directly impacted by what else is going on, in that complex. So the single family home, the neighborhood can have an impact on value, but on a condo, the neighborhood, the condo complex has a much more direct impact on value. So that's why it's important. And Declan, I know you've done this with clients. It's important to look at not just, the four walls of the unit you're interested in buying. You got to look around and see what else is going on in the complex, and how well, the common areas and things are maintained. So talk to us a little bit about how you, it's more of an art than a science, but how you sort of size up a condo complex when you're visiting that with a client.
So it's funny you say that. Just about 3 days ago, I had a client, property in South Boston. Obviously, won't mention the name of the property, the address, but we're a beautiful unit, penthouse unit. It seemed like it had everything. All the mod cons had been done up, 2 levels of living. I remember saying to my client before that, I said, we're not buying that one. What's going on? I said, I've already seen the park right outside it. See, there's a fence that's deteriorating. I see some wood is that's starting to rot, and that's all very well and good. But I also saw a little bit of garbage that was in the basically on the lawn area. So part of it is there's a curb appeal, first off, just like a home, but also just like a neighborhood. If you drive through a neighborhood, you're watching all the other homes, but you'll spot pretty quickly whether it's got a management company or whether it's self-managed. You still see pretty quickly whether the details are not being taken care of. That's going to have an impact in terms of you're going to look, and we'll talk a little bit more about budgets, obviously, but if you might have a low condo fee, but maybe they don't have a cleaning company coming in, maybe they don't have somebody servicing the systems. As you said, it's more of a nuance. It's not quite a science, but you pick up on stuff pretty fast. Sure. When we do a tour of a condominium, you obviously look at the condo itself, but always insist on getting in to see the systems, but always walk the entire condo. And part of it is, it's the same thing even with a rental home. One party can take down a whole complex. It just takes one bad apple, and bad apples exist, so you'll get it. Again, you're not going to know straight away, but you're going to get a feel for it by walking through. Maybe it could be as simple as, every other, somebody has there's trash outside their door, maybe it's shoes strewn all over the place. I know that's going to keep, but those are little signs you pick up on, saying, hold on, there's one person, and they might be the person that's living above you. And that's the other thing is you're living. The walls can be thin. You got to check that out too. I know I'm going on a tangent here, Patrick, but
these are all important topics to consider. And again, this is not an attack piece on condos and purchasing a condo. It's really just things to be aware of. And I know the clients you've worked with, the clients I've worked with, have gone through the process of buying a condo, and different things have popped up along the way, and even after closing. And some of the comments are, well, geez, I wish I knew about that beforehand. So this is really sort of the preparation, what you need to arm yourself with to know what the questions to ask are. So it's sort of, you don't know what you don't know.
And speaking of questions to ask, the question I ask, and it's not just that, again, you're going to deal with this, but even just personally, I ask how many are owner occupied. Because owner occupancy, say something. If you're owner occupant, you're more likely to take care of your area and the common area, because you've got it's a greater benefit to you.
You have a much bigger vested interest in the complex as a whole, because you are a fractional owner of the complex.
At some point, you may want to sell. You're going to want to make sure that the values are up, and you're not as transient as, say, and again, that's nothing against renters.
Exactly. It's not that renters don't care, but when a buyer, when an owner is putting their own hard-earned dollars into the transaction, they're more likely to take better care of that. And when it comes to the financing piece of it, that is something that lenders take a look at. What is the owner occupancy percentage? So if you're buying into a complex that is mostly investor owned, mostly tenants, a lender's going to look at that, as a riskier transaction, again, because there is a greater likelihood that the common areas and the units themselves are not going to be maintained as well when they're occupied by tenants, and that's going to directly impact the value of the collateral, the unit that you're buying. So it just all comes down to, assessment of risk. So the occupancy, the owner occupancy percentage versus renters certainly does play in. And as a buyer, that's a question you want to know. Again, from that sort of perspective, well, if the complex is all owner occupied, well, there are people that have a vested interest. Let's maintain the complex and our units in the right fashion, as opposed to a renter who cares? My lease is up in a couple of months. I'm going to be out of here anyway.
Party before I leave.
Yeah, exactly.
Yeah. But the other thing is, then you got to ask a few questions. And again, it's funny. Everything that I look at, there's a financial element to it, right? In terms of, and that's why banks look at certain things.
Yep.
And I certainly ask. One thing I do ask for budget initially. I've got a management company, so thankfully I can actually go through and I can spot stuff.
So you know what you're looking for. Yeah.
I know what I'm looking for, and that's one of the first things I try to do for my clients is look at the budget, because that's like looking at the systems in a single family home. You're going in, the budget tells you something about the state, the health of that particular association. Another thing, which is kind of an obvious one, is assessments. I love to hear that there was an assessment and it's being paid and they just replaced the roof. Right?
Yeah. So back up for a second for our viewers. Define what a special assessment is.
So a special assessment is, so when you have a condo, everybody pays a condominium fee, right? So that's your way of paying your portion, your percentage of the cost of running the association. That goes towards everything from, it could in some cases, water and sewer, maintenance, management, all those other things. Over time, sometimes it's not enough to cover things that come up. It could be a leak in the roof. They may have to replace a roof, might have to repoint the building. So what happens is the assessment is an extra. You're being asked to pay an extra fee, or pay a little bit extra. So you might be asked, let's say it's a 5-unit complex, for argument's sake, and there's an extra $1,000 to fix something. Maybe it's you need to take care of a fire escape, whatever it happens to be. New carpets in the building. You own them equally. It's five units. It's $1,000. That's actually an easy one. It's $200. It's usually more like $10,000 or $20,000. But you pay that in addition to your condo fee. If people can't, or it's decided that they can't pay that assessment, it could also, sometimes what they'll do is they'll increase the condo fee and then sort of be ready for the next time there's a
so spread it out over time. So what I hear you saying is a special assessment. So every condo unit has a homeowners association or condo fee dues that are paid regularly every month, which goes towards the bigger picture upkeep and maintenance of the building, and the master insurance, the snow plowing, the landscaping, sort of the general ongoing maintenance. But every once in a while you have a large item that needs to be a repair item that comes up, whether that be repaving the parking lot or repointing the brick exterior or replacing the roof. And it's sort of I don't say a once in a lifetime, but once in a long time, you need to replace something major. And the cost of that is divided up amongst the unit owners until that one repair item has been taken care of.
And there's kind of, I would say, hopefully once it's not a common occurrence. And that's a lot of where the budget comes down. Are they getting charged enough? You don't want high condo fees, because that's obviously more money. If it's if it's $150, that's a decent condo fee, but you end up having to pay $800-900. That's your mortgage, and that's on top of your mortgage.
Exactly. So a low condo fee may look great on paper, but if you're taking a look at the budget, and because that low condo fee, there's nothing extra in that budget. There's no what we call reserves, no replacement reserves. There's nothing going to reserves. Well, 3, 4, 5 years down the road, you could be slapped with a huge assessment for a major repair, as opposed to, if your condo fee was $50, $75, $100 more per month, well, that would have taken care of that major repair item, 3, 5 years down the road.
Which is why you, as a mortgage broker and the bankers, insist that you need at least 10% in reserves for it to pass muster, right?
Exactly. Yeah. So when we take a look at analyzing the condo complex, again, it's more involved than just taking a look at a single family home. We're looking at the individual unit that's being bought, but that individual condo unit is part of a larger complex, the condo association. So the lender needs to take a look at what's going on in that bigger picture, that bigger condo association. And a big part of that is the budget, making sure that enough money is being collected to take care of all those regular maintenance items, snow plowing, landscaping, cleaning of the common areas, pool, tennis courts, whatever amenities that are there. But also over and above that, 10% of whatever that budget is being put aside as replacement reserves, so that when that major repair item comes up, whether it be repaving the parking lot, replacing the roof, whatever it is, there's money in that reserve account to pay that without having to slap a huge special assessment and increase in condo fees on all of the unit owners. So it's a budget. That's what it is. And as part of budget, you have to budget some emergency funds, and that's kind of what it is.
Yeah, and for those that are not familiar with it, it's 10% of all the collected condo fees, so it'd be 10% of the gross income of the association.
Yeah, correct. Yeah, good clarification. It's 10% of the gross revenue, the gross condo fee that's being collected. So it's not 10% of some. It's the whole budget, all of the money that's coming in. 10% of that has to go aside for reserves.
But keep in mind, if there's not a lot of money coming in, it's a very low condo fee, that might not be a big reserve either. So you have to use a little bit of common sense in terms of what is in there.
Yeah, and so somebody like you, Declan, having a property management business, but also representing buyers and sellers. Just a wealth of information here to take a look at those condo docs, and in particular the budget, and look at it and say, well, yeah, the numbers add up, but it still doesn't look right, based on the size and the amenities in that complex.
And then, when you do make an offer, there's a condominium addendum where you're looking for documents, but something I try to get, and associations tend to be reluctant, and I can see why. Meeting minutes if possible. Associations are supposed to meet, once, twice a year. They get together to discuss all the items, but it may not come up in the budget, but there might be something about that rat problem, or, the squirrel that was getting into the gym. Yeah. So
great point. Yeah. So from a lender's perspective, very rarely do we see any of the minutes for those meetings, but that's a great point. That's definitely something that you can advise your buyers to take a look at, just to see what is it, are people in the complex difficult to get along with, and you can sort of read between the lines on what's going on in the minutes of those meetings.
Well, the other thing too is minutes of those meetings. That's when That's when people who have issues, they will bring them to the fore, because they've got a chance to speak directly with the management. They're sitting, on a roof deck or in a foyer or wherever it is they actually have that meeting.
Yep.
And you will learn a lot about what's going on, about the politics, the people, what's going on with that place and how it runs.
Yeah, exactly. So, you buy a single family home, you can put up a nice big fence to separate you from the neighbors. In a condo complex, not necessarily the case. Okay.
And I hope they don't want to put a big fence up between you and the neighbors, but yeah, you're right.
So just some other items to be aware of. So we referred to the term condo docs a couple of times. So let's try and define those and explain what those are. So the condominium documents consist of the master deed, so the master, the ownership of the condo complex that is recorded at the registry of deeds, the unit deed, so who owns the individual unit. We also have what are called the declarations and bylaws, which are basically sort of the rules and regulations of the condo complex. And I'll come back to that in a second. we've talked about the budget already and how important that is. And then there are two types of insurances. So there's the master insurance policy, which covers the exterior of the building, the big picture, the common areas. Okay, but there's also what's called an individual condo unit owners and insurance policy, commonly referred to as a walls-in policy, because it covers the four walls of your unit and everything inside. Now, it's very similar to a renter's policy in the sense that it's covering, if that's what you choose to cover in that policy, the fixtures and the interior, what's in your unit. Okay, and when we talk about that insurance policy, relatively inexpensive, depending on the size of the unit and the finishes, you're talking about $300 to $500 a year typically for a individual condo unit owner's insurance policy. Okay, but again, the condo fees that you're paying, the homeowners association dues, typically that monthly fee you're paying, the biggest chunk of that is going towards the master insurance that covers the entire condo complex.
Something like you said on that, Patrick, but it does come into play with the insurances. What is within your walls? Yeah. You have situations where we've had people, buying a property and the window doesn't look it's near its useful life. Maybe the runners aren't as good as they used to be.
Yep. They
owned by the unit, or they owned by the association. So something to certainly keep in mind. We've got both insurances. That's one thing, but
yep.
Where one stops and the other one starts is something.
Yeah, and nowadays lenders actually require that when you're purchasing a condo that you do get walls-in policy. Now there are still some condo complexes out there that in the master insurance, they do provide interior coverage for each unit. Okay, not all that common anymore, but there are still some complexes that have that. So I guess the best advice I can give anybody is plan on that as an expense. You're going to need to cover homeowners insurance, similar as a single family home, on a condo that's going to cover your unit, the interior of your unit. So I want to come back to what was it? The declarations and bylaws, really more the bylaws. Okay, so a couple of stories we were sharing before we started the call, why it's important to take a look at those bylaws, not just get them as part of purchasing a condo, but actually read them, understand what it means. So a couple of instances, I had clients that backed out of a transaction after really digging through those bylaws because they realized it wasn't going to be a fit for their lifestyle. Okay, so in between making the offer and having that offer accepted, and when the purchase and sales agreement is due to be signed, this one client I'm thinking of got a copy of all of the condo docs, including the bylaws, and was reading through them. Now, while the condo complex was advertised as being a pet-friendly complex, when you read through the bylaws, when he read through it, the pet friendly actually had limitations. Okay, so it's pet friendly, dogs up to 20 pounds. Well, he had a German Shepherd. German Shepherd's more than 20 pounds. And that was a deal breaker for him. And, nowadays, pets are like a part of the family, so if he couldn't bring his dog with him, he wasn't going to buy that unit. I mean, I joked with you earlier, Declan, would you, buy a condo complex if you couldn't bring your kids with you?
I think I joked back and said yes.
Today, maybe you would. That might be a good idea right now.
Love my kids, but.
with the homeschooling, and might be a good idea to to get away for a little bit. But in all seriousness, you have to read those bylaws, because that's actually a fairly common issue that comes up. Can we bring our pets? And if it's advertised as a pet-friendly complex, great. But dig into it and what does pet friendly really mean? What's the definition of that? Can you have, 5 pit bulls and a couple of Rottweilers, and I'm not picking any particular dog breed, but you know what I mean, or is pet friendly mean
well, actually,
have a 10-pound Chihuahua?
I was going to say there's certain dogs that are uninsurable, and there are associations that would not, so they will actually pick out particular breeds. They're racist against those breeds, because they don't want to have the liability of having a pet that might fight the neighbor.
That's the condo dogs, but that also comes back to taking a look at the master insurance as well, and what's covered and what's not.
That's a good point.
So maybe a little bit less severe and maybe a little bit more on the eccentric side of things. So I did have a client, so a similar situation, made an offer, but before signing the purchase and sales agreement, was reviewing all of the condo docs, and this particular woman was very much into the holidays, very festive. Okay, wanted to hang a holiday wreath on the front door, the door that is in the common hallway. Wanted to string up Christmas lights on the balcony for her unit. And reading through the condo docs and the bylaws, decorations like that were strictly prohibited. They said you can't have any decorations on your door, no decorations hanging off of the balcony. And believe it or not, that was a deal breaker for her. She that is part of her makeup, and you know what? And while it might sound a little bit eccentric, I'm glad she found that before she got into the unit, because she found it afterwards. Man, she would have been really ticked off.
And she's stuck there. She just bought the property.
Yeah.
I have a situation, completely different type of situation, where I had a developer, that they should have gone to it. They're very good with smart when it came to the legal terms, but just they should have done up the condo. So when you talk about read what's in there, sometimes you just watch and see what's left out. Where a parking space is being sold. It was individually deeded at a condo association. 6 units in the building. There was 9 parking spaces, and this parking space was one that the developer kept. The way it worked out was there was nothing in there that directly identified those parking spaces as belonging to the developer or who had them deeded to them. Turns out that once the association, the last unit was sold, the developer had no ownership interest in the condominium. Parking space didn't belong to him. So now it's 6 years in, $100,000+. The buyer felt like they were being duped. They didn't buy it, didn't close, but they weren't happy about the situation. So long story short is a little oversight. I was brought in as a witness, in the court case. And it was quite interesting. It's just like you have to, again, that's where sometimes it's good even to have an attorney. In fact, I would recommend an attorney look over your...
Strongly recommend, not only you get the condo docs and read them, a lot of it's not necessarily plain English, the way that it's written up. Right. You want to have your attorney take a look at it as well.
Legal document, after all.
Yeah, it is. But that raises another question, sort of, parking and deeded parking spaces, sort of the pros and cons. I mean, from my perspective, I think I'd almost prefer to have a deeded parking space. That's is real estate. I mean, that's an area that you own. You have a deed to, parking spot number 512, and that's your spot. We've seen, especially in the Metro Boston area, just, I think, outrageous prices for selling, parking spots, because downtown areas, parking is at a premium.
$250, $300, $350. It's the same as single family in some other places, or a condo in another town in the suburbs. Yeah,
buy a parking spot and move your car there and sleep in the car. That's
if they let you have to check the bylaws first.
Well, check your bylaws, make sure that's allowable. So condo complexes that have parking as part of it, that's one of the considerations. Are they deeded parking spots? How many guest parking spots are you allowed? If you're having some friends over for dinner, do they have to park 3 miles away, or is there guest parking as part of the condo complex?
And that's certainly a consideration too, is how much on-street parking is there, right? So it becomes, the parking space becomes more valuable as that on-street parking goes down. Do you have an extra sticker that you can give to a guest that can, use a resident space, and for how long and how many times? Sometimes there's a restriction how many times you can use the guest parking space as well.
Yep.
It's definitely there's a direct correlation. And they say that there's a value, there's a dollar. The parking space is worth 50,000 in South Boston. By the way, I'm pulling that's an arbitrary number, but if it's 50, it's probably in around that number, depending on the space. But there's also, when you're buying a place, there's a convenience factor to having it. It's not that if it's a $400,000 condo that it's worth $450 automatically, but there's a lot to be said for having that parking space.
Yeah, it's an extra amenity, and that amenity certainly does carry a dollar value with it.
You don't want to drive around with your groceries, park 2 blocks away and drive.
Exactly. So one thing I want to circle back on, you had mentioned a transaction that ended up in a lawsuit about parking. So one of the things that as a lender we have a document that's filled out called the Condo questionnaire. So the homeowners association or the trustees of the condo have to fill out this questionnaire that gives us as the lender some additional information about the condo complex. Again, how many units are owner occupied, how many are rented, attaching the budget is part of that. Are there any unit owners that are in default that haven't been making their condo association dues, they haven't made their payments? One of the questions there is on pending lawsuits. So is the condo association either the plaintiff or a defendant in any pending lawsuits? And in most cases, if the association is involved in any pending litigation, most cases, that's a complete deal breaker for a lender. They don't want to be involved in a transaction where there's a pending lawsuit. And here's why. It all comes down to the budget. So if that condo association is being sued, so let's take it as a simple slip and fall accident, okay? And the condo association is being sued. Well, if the association is found to be at fault, that's a financial consideration. It could pretty much wipe out the entire reserves. Okay, so if that condo complex now has to cut a check for $1 million for whatever damages that were done, well, $1 million comes out of the condo complex. Where does that really come from? Well, it's probably going to wipe out the reserves, and now you're looking for special assessments. So now everybody's condo fee goes from $250 to $600 a month pretty much overnight. Right. So from a lender's perspective, that's another risk, factor. That's another risk category they're looking at. That, another reason why lenders see condos as a different, classification or category. And in a lot of cases, condos can be more expensive to finance because it is a riskier transaction from a lender's point of view. A lot of times, interest rate on a condo is going to be slightly higher than what it is on a single family home because of all those added, risk pieces that just don't exist on a single family.
It's interesting too, as more and more we're talking about it, I'm sure the perception there is, is condo versus single family. We're not necessarily saying that. That being said, I will give a little bit of my opinion. So I've owned condos and single family homes, and living in a single family right now. There is a thing of, maintenance. You got people taking, the maintenance is getting taken care of.
Sure. With
the lawn, all that stuff. But there's a condo fee that's paying for that. You're paying for management. You're paying for all of that. If you treat your single family home like it's a condo, if you don't have green fingers and you don't want to learn how to get them green, get a landscaper. Have a guy come every 2 weeks, cut the lawn, and you get your utility service once a year. It's going to end up the same or less than a condo fee. So that's that being said, city living, you ain't going to get too many single families in downtown Boston. So yep. Different world. It depends on what you're looking for. Your location. By the same token, I think more people are moving out than moving into the city, particularly with this whole COVID-19.
Sure.
Bring up the elephant in the room.
Yeah. So, I mean, that brings up a great point. So, think about so if it is a single family home, think about your single family home and have a maintenance budget, same as you do with a condo fee with the homeowners association budget. You got how much does that landscaping cost? How much is going to cost to have all the utilities serviced, the furnace serviced, and the AC and all that stuff, and proper planning, proper budgeting, putting that correct amount aside. So
Right.
again, this is not an attack piece against condos, but just based on our combined years of experience, we've seen enough transactions where consumers don't know what they don't know and end up 3/4 or all the way through, or even worse at the end of the transaction and complete a transaction, and something comes up that they just didn't know or didn't know better to ask about, and now they're stuck to a certain degree. Okay, they've bought the condo and it's well, crap, I wish I knew that beforehand, and so that's really I guess it's trying to avoid the oh crap moment. Okay.
Ask questions, but you need to know what the questions are.
Yeah.
You have the right questions. You ask lots of questions. You put yourself in a position.
Yeah, and that's part of surrounding yourself with the right team that'll help you through the process. You've got your mortgage lender. You've got your real estate agent. We don't have one on the call with us right now, but a solid closing attorney and a solid insurance agent, can certainly help you put all the right pieces together to make sure that you're, really fully protected.
Yeah.
So some of the pros and cons and information to think about and ask if you are in the market to purchase a condo. If you need some more specific information and advice on your specific situation, please reach out. I'd be happy to talk to you, walk you through some of the pros and cons that would apply to you. I know Declan would be happy to do the same. So drop us a line, a comment, send us a direct message, and we'll get right back to you and see what we can do to walk through the process, make sure you're comfortable with whatever decisions you have to make when you're going through the home buying process.
I'm also happy if you are involved in a transaction and just need some help with that. Even if I'm not involved with it, I'm happy to kind of review condo costs. Certainly to review the budget, because that's something that's kind of down my lane.
Of course, yeah. I mean, definitely happy to help anybody that's going through the financing process, regardless of what stage they're in. Okay. So we've been going here for a little bit more than a half hour. So why don't we start to wrap it up here? Patrick Queally, your friend in the mortgage business and co-host here of the Wicked Awesome Report, joined by Declan O'Toole of Select Real Estate. We run this broadcast every Tuesday and Thursday at 10 a.m. So please check out the Wicked Awesome Report Facebook page, like that, so you'll get notifications of future shows when they're coming up. And that's all that I had. Any closing thoughts, Declan?
No, I think it's always be asking. It's have the questions, know what to ask for, and I think there's again, as you said, it's not anti-condo, anything where it's just be prepared if you're buying one, and that's speak to your professional.
Yeah, you just have to have the right information. You have to be armed with the right information so you can make the right decision for your specific situation. So just trying to make sure we get the right info out there and you know what questions to ask. So at this point, I guess we'll wrap it up. Another edition of the Wicked Awesome Report. Thanks everybody for tuning in. Give us a comment, a share, a like. If you have topics you'd like to have discussed, please reach out and let us know. We're building our list of topics and would certainly like to speak about whatever the general public wants to hear. So until next Tuesday, so we run this every Tuesday and Thursday at 10 a.m. So until next Tuesday, thanks for tuning in and hope everybody stays awesome. Take care.
Great weekend.
All right. So we'll stop the live.